Good morning and welcome to the Monday Call brought to you by NZ Funds. I'm Stefan Clark, Chief Client Officer at the firm, and to my left is James Grigor, Investment Strategist. This morning we have a very special guest, Dan Ives, Global Head of Technology and Research and Managing Director of Wedbush Securities out of New York, I believe. Fantastic that you're joining us, Dan. You are a very common commentator on CNBC and Bloomberg, talking often about AI, technology, and the bigger themes that are taking place in the American markets, particularly, but globally as well. We're really excited to have you join today. And I thought we would kick off with a little bit about your role at Wedbush, how and I guess how it's evolved over, the growth and rising theme of AI.
Yeah. No, it's great to be here. And look, I mean, covering tech stocks since late 90s, for me, it's evolved in terms of just broader tech food chain. It used to just be traditionally software, in terms of Microsoft, traditional software players, Oracle, cybersecurity. And it's expanded so much over the years. And for us, like, I think that's been our ability to see around corners, like for investors, especially when it comes to expanding into semis, and then in terms of everything we've seen with AI. And look, that's been our reputation, right? Whether it's Tesla or Apple or NVIDIA or Microsoft, it's trying to kind of maybe like see through the noise and see where the trends are going. And I think that's in this market so important because it's very easy to get caught up sometimes in narratives that could take investors the wrong way.
Righto. And so you've recently, well, maybe not so recently, you've got launched an ETF in support of the other product offering that Wedbush has for investors worldwide. Um, it's orientated towards the technology space, AI particularly, but there are other semis throughout it and the holdings that you have. Can you tell us a little bit about that and what led you to launching it?
It's really our research. It's the Ives AI 30. Like it's all based in the research that we put together, and it's separately managed, through on the Wedbush side. But look, for us, it's really trying to identify in our research like who are the 30 names that most benefit from AI, from software to semis to infrastructure to the energy. We talk about the Ives Power 30, which is more on the energy infrastructure. And look, we're talking about fourth industrial revolution, and it's trying to figure out who, not just the big tech players and NVIDIA's, Microsoft, Palantir's, and others, but who are the second, third, fourth derivatives of the AI revolution.
When you think about the AI revolution, and I guess how do you describe where we are today? Because it's still for many, perhaps maybe less so in in the States, but still in New Zealand at least, and I'm sure in other parts of the world, it's not. It's common, but it's not super common as a tool that people are using. And there's obviously some skepticism about use cases on the one hand, whereas other organizations like ours are, very enthusiastic about the direction and the future of it and the opportunity and what ultimately will translate to the next industrial revolution.
It's still very early days. I mean, if you think about it, for every dollar spent on an NVIDIA chip, we estimate there's an $8 to $10 multiplier across the rest of tech. Software infrastructure, software, in terms of like on the power side, we're less than, call it what, 10-15% through this build out. It's year three of a decade long build out of AI. And if you look even in the US, less than 5% of companies have gone down the AI path. Europe, it's basically zero. You go to Asia, ex China, less than 2%. You're just starting to see it sprout out Middle East, India, Australia, New Zealand, and others. And today it's LLMs, it's Claude, it's OpenAI. But in the future, it's about like robotics, physical AI, autonomous. I mean, this is where this trend's heading. And you're gonna have $4 trillion spent next few years on AI. And it's still very small amount that's been spent to date. And I think that continues to be why we're in a multi-year bull cycle for this market.
Yeah, it's incredible, isn't it? And so what does the next phase look like? If we're, how do you think capital is going to be orientated, and where do you think the most successful use cases will flow through commercially?
I think the next phase is really going to be like enterprise AI. Because if you think about like everything we've seen today, it's like from NVIDIA, AMD, to TSMC and others, it's all about data center build up. But the use cases, it's just starting. I mean, that's from Palantir, Datadog, ultimately going to be Snowflake and other software companies. And I believe you'll see the use cases on ServiceNow and Salesforce.com and others. So I think enterprise use cases, like how as they get deployed, not necessarily even just from a cost cutting perspective. I actually think the vast majority of them are going to be revenue enhancement, monetization. Then there's the consumer piece, like as an Apple ultimately goes down the AI path, when they launch their AI strategy next month, I think 20% of the world's going to access AI through an Apple device. And that speaks to like the consumer piece. There's going to be hundreds of apps. You're going to see LLMs become more and more commoditized. You're going to have the physical AI piece around robotics and autonomous and others. So that's kind of the future. And I think those that will call it maybe like AI bubble, or, we say it reminds me like 1999, 2000. I covered tech stocks back then. And you can't even compare because this is a true fourth industrial revolution.
Dan, when you recently commented on your trip to Asia, that sort of, I guess, really enhanced your view around where this is going. What was that trip specifically? Um, what did that do to open your eyes? Because I think that's a core piece of the second, third, fourth derivative. It's not just the LLMs, which are US based. It's starting to get global. But what's particularly in that trip made you so excited?
Yeah, and that's why like our, wherever 3, 4 trips a year to Asia, like they're so important because you gotta understand what's happened in the memory market. What does demand look like coming out of Taiwan? Demand and supply, we think's 12 to 1, in terms of what we see today. So that you walk away from there feeling like memory chips continue to move higher, like NVIDIA continues to move high. I mean, it's our view, like it shows the chip trade has a long way ahead of it because of supply and demand. I'm not saying at one point, if competition, things start to catch up, but this there's a clear underestimation, I think, that investors have of the scale and scope of this AI revolution.
And so when you think about Asia, is that from a chip and manufacturing of the sort of, I guess, the upstream part? And actually, we're not even talking about yet in terms of actual use cases. Like that's really exciting about Apple because everybody's sort of written them off a little bit because they didn't, build an LLM, but actually they're just going to be massive beneficiaries
But
using.
and also Apple, like, they're essentially like a toll collector on the highway. I mean, you have 1.5 billion iPhones, 2.5 billion iOS devices. You start to ultimately get a piece of that pie, launching of models on the phone, eventually AI enabled devices. Like I actually think like Apple's like I think a sleeping giant, but it's one that's being like way discounted. Now look, they've made errors. Okay, like no, and it's been clear. We've talked about it, but I'm just saying like when you have an install base like that, that also creates a lot of opportunity.
It's like it's in any business, distribution, 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 and they've got it in spades, and you don't need to build a LLM to distribute AI.
But it's the same view of like Tesla. Like when it comes to like physical AI, like they could be late, the timing could be off. But when it comes like autonomous and robotics, like they're gonna be a key winner on the physical AI piece. Also, it's our view eventually like they merge, Tesla and SpaceX merge. And that's look, I think in this market you have to be able to see around corners because I think a lot of investors have been caught, whether it's Liberation Day, whether it's Iran war worries, whether it's some stuff with like the Fed or you get caught up in narratives. And I think that's created like a lot of the opportunities that we've seen to own the winners that get dislocated in those sell-offs.
Yeah, the big theme's still intact, right?
Look, haters hate, man. I mean, at the end of the day, right? Like, I know so many, like they've been negative on every transformational tech stock the last 25 years. Because the bears, when they're in hibernation mode, they can't see AI in their spreadsheets.
So I guess, building on you've sort of shared the view that Nasdaq will hit 30,000 by the end of this year. It's entirely possible. What are the building blocks that obviously there's the themes, but are there particular bits that will accelerate that or help achieve that you see?
You need the use cases to come to, because right now, I think the big piece is the software piece. If you look, I look where Microsoft's trading, like 400, but like look at Oracle, ServiceNow, Salesforce, Workday, the parts of cybersecurity. Like you need now to see the next fate. Because right now, like investors are like, okay, CapEx, no one's doubting it. Look what's happening on hardware. Because that's what you see, like every institutional investor, they own basically all hardware, chips, softwares that do not enter zone. In order for this route, you need to see the software piece, the use cases, the monetization come through. And also, I think part of it too is like right now, it's still like more of like a dystopian view, like AI is just going to cut jobs and raise electricity bills. But it's like, I could argue like in the next few years, like is it going to finally like cause the ability to cure major diseases that we haven't had since polio? Like whether it's cancer, dementia, Parkinson's, like these are some of the things like AI is going to enable in pharmaceuticals and biotech and not. So I think that's also like very important, and that's part of the use cases from like financial to marketing to pharma to healthcare to what we see on the consumer side. Like just starting, but you need to start to now see the monetization, the use case piece.
And are you starting to see that, Dan? Are you starting to see these use cases being played out? I know you've talked quite positively on software stocks because they have been hated, and I guess writing off something like Salesforce, who's had the same founder since the start. He isn't sitting there ignoring AI. He must be doing something, and so you can't write these guys off.
Wait, exactly. Look like Palantir, Datadog, Innodata. Like you're seeing it. Now the next thing is like Snowflake, Oracle. But like when you look like ServiceNow and Salesforce and some of these others, like look, did like a Benioff and Salesforce, did they like underestimate how quick this trend was going to disrupt things? Yeah. But it speaks to like you can't just count the whole sector out. Is Anthropic one of the most transformational things we've ever seen? Yeah. And you could argue like, OpenAI and everything that they were doing as well. But this is a long game. We're only early in. You can't just paint and say software is done. Because I just disagree with that. AI native platforms are not just going to be able to disrupt the core install bases that we see.
We have a saying at NZ Funds about thinking in decades, not years, and I guess that's probably too long in the context of AI. But it is, you've got to think in terms of, or in any technology.
Multi-year, like multi-year. Exactly. I agree.
The other part to this is that if there's all these amazing new businesses creating new software or use cases, and there's obviously there's the physical piece to it as well. It's a foundry for new IPOs. And you've talked a little bit about that, how you expect new IPOs to be coming to market. SpaceX, of course, is um, a, a, potentially a cornerstone part of that. And the idea of space data centers and bringing together, as you mentioned, Tesla into it and changing it into an AI, much more a broader AI orientated business. Take us through your thinking about what this means for issuance generally, what it means for how the SpaceX opportunity presents itself.
I think it's like a category creator, like in terms of space. Like, but it's gonna be about data in space. I mean, we talk like Planet Labs is like a name that we're super bullish on. Like, we talk about that. Like, this. But as you see companies, whether it's OpenAI, Anthropic, like it's going to increase transparency in the market to have them public. And I think like when I look at SpaceX, like that's the start of a whole new theme, data centers in space and others, that's going to play out.
It's generating a lot of excitement. Even the idea that someone's going to try and list a business at $2 trillion, and obviously that's going to have big impact for the market generally.
Well, and also there's the ripple. I mean, like just like traveling around the world over the decades. Like I don't care if it's like New Zealand, U.S., Europe. This this tidal wave's coming of technology. Like there might be things with like regulatory and data privacy and other things that stall it in some countries, or but it's not like stopping it because innovators are going to continue to innovate. Developers do it. And I just think it's a democratization too that you're seeing. Like SpaceX, like that's going to create so many other companies.
What is the just while I've got you on that topic, what is the reasoning for merging SpaceX and Tesla? What would they see out of that?
Well, it's my view. I mean, look, like XAI merges SpaceX. Obviously XAI. But it's going to be it's about data because like Tesla, a big part of the thesis, it's data driven. I mean, that's what's really going to enable them to be so successful when it comes to autonomous robotics. And I think essentially what Musk is doing is creating like his own ecosystem. Like like as much as you talk about like circular financing and like like a lot of this, I think smart moves that like NVIDIA and others have made, like this is basically creating like their own ecosystem within Musk.
Who therefore, Dan, are the you know, you're an optimistic guy, but it's always interesting. It's not supposed to be a negative question. I'm with you. I'm super psyched about the next 5-10 years. But who are the losers out of this? If not that you have a short ETF, but like what companies do you think really are going to struggle in the revolution?
Look, Adobe isn't a good example of one. Like they got work cut out for them, right? There are other software companies, like especially like pure play software companies, that like this is going to be a threat. Like they have to change their business models. When you think about like IT services and just like what's happened like in the Indian market and things like that, I mean it's a huge potential headwind there, right? Like in other words, like that's like a good example of like areas where I view them like on maybe on the wrong side right now of the trend.
But overall, the I guess the flight of capital into AI, that is the key theme, and then all the service providers around it, the creation of new companies, like you say, anyone that says this. I love you mentioned, I think it was just on Friday last week or Friday New Zealand time, on CNBC around we're in the for those baseball enthusiasts, which I'm a half one. I'm probably a massive enthusiast from a New Zealander point of view. But what was it like
You can spell it.
third innings? You got guy on second base, and we've still got 6 innings to go. We're not even halfway here.
But that's my whole view. Now, like, look, I'm not saying that like we're not gonna have scares. We we've seen it, right? Private credit, like the Iran situation, some of the OpenAI too big to fail. I mean, look like a lot of these sometimes like earnings season, whether it's CapEx stuff. I mean, we're gonna go through like moments of doubt. But my whole point is like this is truly a fourth industrial revolution. And I could argue just going back to like dot-com bubble and burst. Like I don't like back then like a lot of tech companies trading at 25, 30 times revenues. Today we're talking like 25, 30 times earnings. I'm just saying like it it speaks like you're almost building out a new economy for consumers and enterprise and for companies. And I'm just not one where it's like, oh, it's going to take away all the jobs and it's the work. I mean, I actually think at the net, more jobs are created, more companies are created, more innovation over time. It's a democratization of data rather than some sort of, this is like the doomsday or something like that.
Why do the haters hate as much as, we feel it sometimes when there's obviously major benefits? Where does that come from? And how does it, I guess, other than selling and, major licks and if you're on Wall Street, but where does it come from?
I think a lot, and I think social media has amplified it. I think there's a lot of like skeptics, doubters, investors that have just, they've just so laser focused on like valuation, and they look at things through just a prism that it can never change. They focus on on the PE but not on the growth or whatever you want to call it. Like, and they're always waiting for another dot-com bubble or '08 financial crisis. And I think part of the problem is that like a party could go on from, like we say, 9 p.m. to 4 a.m. And the whole time you're outside saying, the party's not even going to be that fun. And you bears watch the party through the windows. There might be times that the party ends, but you've missed the whole run. And I just think like that's part of the danger in these markets. It's very easy to just look what happened in March. I mean, like when you saw like the Iran sell out, I mean, we talked about every day. Like that was a gift, in our opinion, to own the core winner. I mean, in the scheme of the next few years, like Iran, you shrug the shoulders at eventually this thing will end. It will be resolved. It will be probably a safer Middle East when it's all said and done. And it's not stopping AI revolution. It's not stopping the growth. So just like when you saw some of these names sell off the way they did, it just created opportunities, in my opinion.
And
Yeah.
it also doesn't mean that you get stocks that go to zero because they got the wrong technology or whatever. And that doesn't mean to say it's the end of the journey just
But
because
go
one.
back to a year ago. Look at Alphabet.
Yeah.
DOJ is going to break it up. AI is going to crush search. They're nowhere when it comes to technology. Now look today. I'm just saying, like, narratives quickly could change too.
That was the same with Anthropic, wasn't it? Wasn't it 18 months ago? They're like, this Anthropic thing is never going to take off.
So true. I mean,
Enterprise
you could,
enterprise is wrong. No one's ever going to buy it on the enterprise. It's only
but
gonna
also
be.
that's also why I think it's like very important to like for every investor like to almost like sometimes like do their own work, try and like visit companies or feet on the ground or doing their own, and sometimes like tuning out the noise. I think it helps a lot.
Defense spending is another one, right? And you've talked a bit about Palantir and how important it is as a business, and I guess it's forging its own path, but also the idea that as governments ramp up spending generally in defense, AI companies will be able to capitalize on that
100%.
meaningfully, right? I think you said you expect technologies or software spending from US government to double in the next, I forget what the period was, but it wasn't a long period, maybe it was a decade or something. How do you still stand by that? Do you still
Oh yeah.
believe that it's gonna massively ramp up?
I think it's accelerated to some extent, in terms of what's happened. Because more and more government's going to spend this technology. It's going to be more and more of an innovation catalyst for enterprise. Look at Palantir. They were essentially creating the government. And look what they've done in enterprise. So it just speaks to the opportunities. And you look at what's happening, like, look at Anthropic. At first, they tried to kind of say, like, we don't want to sort of participate from U.S. government, Pentagon perspective. And, now look, right? I mean, they're trying to kind of like apology tour, whatever, to get back in because hundreds of billions of dollars being spent. I get some of the frustration internally and some of the, controversy, but you cannot not participate in these mega trends as these companies.
How do you think, just winding back for a second, with Palantir and SpaceX and so forth being AI companies or increasingly so, what do you think the sort of the IPO pathway from here will be? Do you have in your mind other private businesses that you would really love to see come public, and is now the time for them to do that?
Look, I think it depends on the company, right? I mean, you're talking about SpaceX, Anthropic, OpenAI. Companies also have to be like ready, right? Like, it has to be at the right time. You can't just rush IPO just to rush it. Investor appetite's there for the right names. But as we always say, like just because a company says they're AI doesn't mean that they are, right? So you gotta like separate out for the companies that it makes sense from a capital perspective. But it goes back to like this is a time of innovation that you're gonna see a lot of private companies go public.
I mean, that's what this is sort of a good learning from the tech boom and bust, because you had companies listing with no revenue, let alone no
Totally,
profitability, and now you're just not getting that in the AI space either.
totally, 100%. It's smarter investor. It's kind of like it's like a funnel, and you're now seeing like the companies that can do it, like they've gone through a vetting process that's so much more intense based on the last few years.
Because that tech bust was it kind of deserved it in 2000, because there's so many companies that didn't do anything other than have .com after their name.
Of course, but then you can argue, and I'd argue, like that was almost like the build out of like telecom, internet. It's like we're not here if it's not for that. So if you want to think about things, like you talk about decades, if you want to think about things like 30, 40 years, it's like that was almost the beginning of where we are today.
Yeah, it was a necessary part, right? Without all of that, the economists call it
The
creative.
fiber and
Yeah, all of the bits that was the intense amount of innovation that came through, and yes, lots died on the way, but we learned as a society, as a species, a whole bunch of things that paved the way for this phone call happening over the internet. So,
and I think a lot of it is like a lot of like pessimists or bear whatever. It's like haters. It's almost like a lot of it is like more like we're optimists by nature. I think it's more like the way like you like look through a life or company. There's just some people like if they won the taxes, they'd be worried about the tax implications. Like it's just like you know what I mean? It's like, and I think you have to be also a technologist too. Like you have to be able to have a view like that Tesla could go from they can't make an electric vehicle to now 10 million on the road. SpaceX can't be successful to eventually Musk goes to Mars. Like I'm just trying to like walk through like I think that's really important.
well, if you haven't watched one of the SpaceX rockets land, it's kind of hard to fathom how amazing it is, right? And yet someone had, Elon probably had the idea, we can do this, we can reuse a rocket, this is going to change the world.
Totally.
And then that forges the path for for a revolution, and then satellite revolution, and then that, then there's a data revolution that comes off the way
100%.
of that.
Yeah.
Okay, hey, my last question, because I'm conscious that it's Sunday evening where you are. My last question is, and it sort of builds off Musk and frontier thinking and technologists, is when you think about the characteristics of the companies and the people leading them, the visionaries, if you will, and you've been obviously in the game for a wee while, what are there particular things that you look for, or traits or characteristics in the leaders of those businesses that you go, that's someone I feel really confident in putting my client's capital towards?
I think like they don't focus on their stock. Like they're focused on building out the technology moat and they become laser focused on it. And despite all the missiles coming left and right, they stick to the point. And despite investors at the time, you gotta do this. They just stick to whether it's a private company or public. And they also like their leaders within. And then that goes from like Musk to the Godfather of AI, Jensen to Nadella. I mean, I could go, to Carp. I might go through many companies. Like a lot of times, like it's like I think it all starts with like it's not necessarily key man risk, but like, it starts with the individual. Like Microsoft without Nadella, Palantir without Carp, Tesla without Musk, NVIDIA without Jensen. Like I could continue to go down. Sundar, Google. Like you could just keep going down the path. AMD, Lisa Su. Like it's it's underestimating how important the leaders are.
It's and that they don't buckle to the pressures of the outside world. They focus on the
That
piece.
that's the key. That's the key. That's what separates them. Jensen 2022. Well, why you investing in AI? You're gaming GPU. Musk 2015. You can't do electric vehicle. You'll go bankrupt. Nadella 2014. Microsoft not a cloud company. Why you do? Apple with going back to Jobs like 2007, dude. BlackBerry, who's gonna switch in BlackBerry? Why you're only launching with AT&T? How you gonna be successful?
Fantastic. Thank you so much for joining us, Dan Ives.
Yo,
It's been
thanks for having me.
to have you.
Thanks, Dan. Really
Thank you
appreciate
so
it.
much.
Have a great week coming up.
You too.
Thank you. Right. Next on the call, we will be joined by Charlie Astwork, who is a investment analyst at NZ Funds, to talk a little bit about issuance across the states and some research we've been completing within our capital markets technology component at NZ Funds. Charlie, welcome.
Thanks for having me.
Right. Hey, take us through a little bit of the research you've been doing on market issuance in the equity markets. What's the background to starting that piece of work, and where does it lead you?
Yeah, so kind of similar to what I'm often doing. It's looking at what's everyone not thinking about, maybe enough. And often in equity markets, we're focused on the demand side. What's everyone wanting to buy? Where's the money flowing? And people often neglect, well, what are they buying? I mean, a financial market is that, it's a market. So there is a huge supply component to that. So we kind of started looking at equity issuance as a whole. We looked at gross equity issuance, which is IPOs, SEOs. We looked at net equity issuance, which takes into account M&A activity, share buybacks. And basically what we found is when you have a lot of gross equity issuance versus not a lot of gross equity issuance, effectively less supply increase than you'd have normally. Those years where you have below average gross equity issuance, it's a really positive sign for the following year, with about 94% of those years with below average gross equity issuance being followed by years of positive returns, which to us is a pretty meaningful explanation of what's to come in financial markets.
And so tell us about it then in terms of, have we had a below average equity issuance over the past year or so? Is that
Yeah.
where we're at?
So past 3 years have been below average gross equity issuance, and that's as a proportion of market cap, so it's all relative, which for us is quite a bullish signal for this year.
So it's kind of, it's microeconomics 101, supply and demand. There's been less supply of companies to invest in, so therefore same amount of capital or increase in capital as economies grow, so more dollars fighting for less issuance means markets go up, essentially.
Yeah, and that's particularly enhanced with more sticky demand, with larger institutions allocating capital. It means that when those moves happen, they happen big, and it's quite impactful. And when they don't have new names to go to, effectively,
Money's got to go somewhere.
yeah, and it goes where it already is.
The bummer about New Zealand is that you could say that there's been no issuances here, so it should be rocketing, but all the money's just going overseas because it's so much easier now to invest in those issuance and companies overseas, isn't it? That's probably...
Yeah, and that's why the US has been the main focus, is because in a globalized economy, money often flows to these big areas, as opposed to maybe, years ago where people would have just invested in a New Zealand business because they lived here. And it also says a lot about sentiment. I mean, if you think about it, nobody really knows where their business is at, as well as the people who are at their business. So like when you get a lot of IPOs, businesses are going, well, actually, we're probably at a pretty good valuation here for the most part. If we want to raise some capital, now's a great time to do it. But you get the opposite. You get that, well, maybe we shouldn't go to market now because actually it looks like we're going to do pretty well over the next year. Returns will be, likely strong. So we might get a bit of valuation. And that signals to the market, well, these businesses seem to know that something's coming. And I think that's also really explanatory of why you get positive returns in that next year.
And I guess it's interesting that one, I think, because they obviously therefore don't need the capital, and therefore they don't need the capital because perhaps they're generating their own revenues and cash flows and profitability, and so that sort of delays it even further. Whereas what we're talking to Dan Ives just then in the it's a little bit before your time, Charlie, but in sort of 98 leading up to, if only it was before my time, but it's not, 98 leading to sort of the turn of the century, you had companies that weren't even making a revenue, and so they were screaming out for capital, and so the issuances were numerous as all this money was needed to create these companies that ended up, a lot of them, not surviving.
Yeah, and I think that's a really important thing to consider. Low issuance isn't no issuance. So it makes you wonder, okay, who are these businesses that are issuing at this time? And I think you're right, in those years that you get extreme issuance. I mean, 2000, 2007, there was a lot of gross equity issuance. And that's when you go, well, you're going to get a broader type of business that is issuing. You're going to get those names where a founder's gone, well, okay,
It's time to take some money
yeah.
off the table. Yeah.
Whereas when you've got low issuance, you've got to start to think, well, while you might get to, in a more narrow way, a business that's got a high valuation, you've also got some of those businesses where you've got founders, maybe like Elon Musk, who are going, actually, this capital could be really helpful to help me grow my business. And at that point, you're less worried about what the business is worth today when you're raising that capital, which means those IPOs in low issuance may actually be of a slightly higher quality for the most part.
Yeah. And a counterforce is people have been buying back shares more and more over recent years, right? So your actual, if all else equal, if you're buying back, the number of the issuance, the pot of shares available is declining.
Yeah, you're getting a massive takeaway. And over the last few years, that's accelerated a lot. And it's been quite heavily concentrated amongst bigger names, with a large portion in like the top 20, top 50 names in the S&P. And like you say, that's that mechanism of actually we're reducing supply. And that's also at a firm-wide level as well. If the likes of Microsoft is buying back shares, the amount of shares for that business are effectively smaller. There's a smaller flow, which means you get that supply impact, but you also have a mechanical change to EPS there as well, which kind of feeds into it. And while I think it's maybe a support, I think it definitely hasn't overpowered the actual growth that is happening with those names.
Dan was obviously talking a little about AI coming through, and that SpaceX is looking to come to market, and there's a pipeline of other potential companies that might, and at the same time, there's talk of SpaceX if at IPOs at being at around $2 trillion. I don't know how much the actual issuance will be, but that's what the valuation would look like. How does that, is that game changing for purposes of supply, or is it more that that's just, yes, it's big, but it's actually not, it's alone, it's not really going to suddenly swamp the market with, take it from being a low issuance to a high issuance period.
Yeah, I've seen talk of numbers maybe for something like SpaceX issuing around 75 billion in float,
Yep.
Which compared to previous like years across the whole US market it's relatively meaningful. But I think it comes back to that question of what are we issuing? It may still end up being a low issuance year, and it's where you're getting that quality talk. What becomes, I suppose, more of a risk is there's also talk around, well, if SpaceX goes, who else follows? And do we get a massive, opening of a floodgate
Glut.
and pour
Yeah.
through all these other IPOs that are more your traditional burst sort of IPOs? So that will be one thing to watch. And that's actually something we include in our bubble risk monitor that we have in the investment team.
And is that because if SpaceX were raising money on the market, there would be a huge amount of demand versus supply of SpaceX shares, and so it would be massively oversubscribed. And then there will be all this excess capital that didn't get allocated shares that has to go somewhere, and so people take advantage of that and list at the same time. Is that kind of the phenomenon that's happened, or is it just creating that appetite in general for IPOs because it's exciting and SpaceX and it probably trades up and all this sort of stuff?
Yeah, I think it's a real mix. I think across maybe that sector, I know that we were hearing before that actually for space as a sector, you might get a bit more of that effect of businesses go, well, there's a huge appetite for SpaceX. Why is my space business not going to have a similar impact? But it does come back to that reason of why are these businesses going to market? If SpaceX is going to market because they've realized that actually the next few years they might have exceeded capacity to a certain level, then you might get a lot of other businesses that feel the exact same way about their own business and therefore they take it to market. But I think it's very possible that businesses, I mean, the other ones you hear in the mix are Anthropic, potentially OpenAI. These are businesses that are spending a lot, and you can see very meaningful reasons for them to need more capital, and that they are doing that on private markets already. So yeah, it really depends on the reason for taking to market, and if all of a sudden a bunch of other businesses start following the trend of SpaceX, I think that's definitely something to consider as a potential risk for this AI boom.
Yeah, and I just find it fascinating because you say something like Anthropic, which owns Claude, and they were screaming out for the need of cash up until I think we've talked about on this call before, but they now run rate $33 billion a year, and they've got positive gross margins. I mean, they might never need capital, and actually the IPO could be not trying to raise capital; it just could be people wanting to sort of tap out. Those early investors, they've made 1,000 times their money genuinely, and they want to take some capital off the table. So it's not just about needing cash, is it? It's about changing the guard. And I think some of the work you did, I think it was you, Charlie, was Amazon, where actually their the stock price performance got even better when that old guard of initial investors left. They made their money. They did wonderfully. They did not believe the next phase, but new capital owners came in, lots more, not just one or two big investors, but many institutional and retail investors, and that led Amazon to go from whatever it was to $1 trillion company. So it's not a negative thing to need cash, but it's also not a negative thing just for founders to sell out and get the next guard or stakeholders to take over.
Yeah, I think definitely over a much longer horizon, that's 100% the case. They wouldn't issue their business if they thought, like it's over. Like these are real businesses that have been built well. It's just a question more of, at the end of the day, they do want to try and take cash out of the business at a point where it looks like it's about as good of a price as it's going to get. That's human nature. But I think for the broader basis, I don't think businesses like Anthropic going to market means anything about how big AI businesses could be in the next 5 years. I think it's not telling almost at all of that.
Yeah, you get this sort of short-term sentiment piece. Suppose lots of come to market and prices get hit for a little bit because there's a big supply of AI, IPOs, and they stag at first, as is often the case, and they come back, and that tells us nothing about where the technology is going to be in 5 years' time, or the use cases, or the profitability of the businesses that build products that people want to buy and use, and that will ultimately drive the outcome.
Well, the Facebook IPO was a disaster. It was
Totally.
traded. I forget what the numbers were off the top of my head. It's trade down 20% or something. And then the rest is history.
Yeah. Okay. Hey, thank you, Charlie. That's really helpful. It's particularly useful, I think, in the context. Dan is obviously super enthusiastic about the direction of AI. and the possibility that it presents for businesses worldwide, first tier and all the derivative layers below it. But at the same time, there's this interesting piece around, even with that going on and all the enthusiasm, we're actually not issuing that much relative. We're below trend at the moment, and that's positive at a macro level.
Hey, Charlie, quick question. What did you use to do all this research?
So initially this was less AI, but then it turned into a lot more AI when trying to actually understand the mechanics of it. And I think similar to Dan, it's like you use it, and it's like watching a SpaceX rocket ship land again. Once you start using it, you go, "Well, this is probably quite revolutionary."
Yeah, so it's amazing where it is good for writing emails, and it is good. I heard this. It's good for writing your kid a sonnet for their birthday, but but it's also game changing when it comes to our work, isn't it?
Yeah,
In terms of the
100%.
analysis we can do,
Yeah.
and I think that's not just us as in NZ funds. That's the world over.
Yeah, and you can just do so much more.
Like the email was for fax machines. Who wants to go back to them? Okay, hey Charlie, thank you so much.
Thanks,
It was
Sam.
great research. Thank you, everyone. We hope to see you again in a couple of weeks.
New Zealand Funds Management Limited is the issuer of the NZ Funds Active Income Series, NZ Funds Active Inflation Series and NZ Funds Active Growth Series, together the NZ Funds Active Series, as well as the NZ Funds KiwiSaver Scheme, the NZ Funds Managed Superannuation Service, NZ Funds Wealth Builder and NZ Funds Income Generator. For further information or to request a copy of the product disclosure statement for each of these, please contact NZ Funds or visit nzfunds.co.nz. This recording is provided for information purposes only. The information provided is not intended as a substitute for specific professional advice on investments, financial planning, or any other matter. Past performance is not an indication of future returns.